why haven't real estate prices come down more than they have already, right? And I think you guys had a really good breakdown of this on a recent show that I listened to. I forget the exact number of the episode, but you did a great job breaking down the market, and I would generally agree with all of your conclusions. The biggest thing in the single family residential space is that what we call the lock-in effect, right? If someone has bought a home in the last few years with a 3%, or 3.5%, 4% interest mortgage rate, they're not going to sell their property, right, and move down the block. They're not going to upsize their house. They're not going to downsize their house because they've got this great rate. They're trapped essentially into this mortgage. And what that means is there's not a lot of existing home inventory coming for sale on the market. And that is propping up prices right now. It remains to be seen how long that can last, but I think we have a good bit of time. I wouldn't be surprised if there's not a lot of appreciation over the next several years, or even a slight downward trend. But I don't understand why a homeowner would voluntarily sell their home. You will see a floor to transactions because people have to move because family obligations, that new job that does pay so much more and is such a much better opportunity that you have to take it or you get laid off and move. So there's a floor to transaction volume, and that's what we're seeing now. I think it's a very gradual and years-long process, maybe 5-10 years before you see transaction volume approaching what we saw recently. And the one area I would kind of dive into where I would exclude from that analysis is new home inventory. We have a lot of new homes that have been permitted in the last few years, and builders will monetize their inventory. They will sell that. So I think that right now, and you can see this live in the market, is actually one of the best times ever to buy a new house, right? In terms of the leverage that you're going to get over builders and concessions and those types of things, relative to existing homes, and that will change over the next 2 or 3 years because nobody's starting new projects now. They're just finishing the projects that were already underway. So hopefully that's a helpful color on the backdrop of the market right now.
Quick question, interest rates. I mean, you talked about locked in. I mean, I'll confess that I have a 2.5% mortgage that I planned on paying off in the next year, but now it's just, I have such a crazy spread between I make on my cash and that I've had second guessing that whole decision making process. But the question I have is, what about this 6.5% mortgage? I mean, does that, even if it's new home inventory, when you say this is still a great opportunity, what do you tell somebody who's facing, because it's not so far in the past that they don't remember what 2.5%, 3%, 4% mortgage rates look like, and here they are looking at 6.5%.
Great question. So I think we have to zoom back out there to answer that and thinking about the buy versus rent decision, right? And where does that decision get made? 2 years ago or a year ago, I would have told you that the break-even point on average in this country, according to a little Excel model I made, assuming 3.5% appreciation, so whatever you want to assume, but I would have said it was 5 to 7 years, right? Depends on which market you're in, but if you're in San Francisco, it probably is a little longer than that. If you're in Memphis, Tennessee, it's probably a little shorter than that, right? But it just depends on your market. What has happened, I think, is that the break-even point has really been pushed out, right? So is buying or renting a better decision? Well, with higher interest rates, you need to be committed to living in that property, or at least owning the property. You don't have to live in it for a lot longer of a time period to make up for the transaction costs, the higher payment, those types of things. It'll take longer for the long-term averages of the market to cover the spread in terms of cost between buying and renting an equivalent place.